Hi there, welcome to Kneppy Invest and welcome to the 4th of June 2024. An average day on the market, unless you're significantly invested in small caps or mining companies, because both of those sectors or indices are down almost 1%. But overall, the ASX 200 only down 0.2% right now. So, and in fact, that's after it was up a little bit at the start of the day. So, a little bit of weakness in the markets today. That's not necessarily a bad thing. I am learning about covered calls today. That's one thing I am learning in my spare time. So that could be an interesting way of generating a little bit of cash flow, but I'm still not sure about that. Now, the agenda for today's video is fairly similar to other videos. I might have a look at a few tweets. A few interesting things did happen overnight. And then we'll have a look at the ASX Today, the best performing and worst performing companies, sectors, indices, and then a top 5 announcements of the day, focusing on companies whose charts look really good as well. So that's something I want to do now in the future is when I do talk about top 5 announcements, focus mostly on those companies that or whose share price could be breaking out or whose share price is already in an uptrend. And then, if I have time, I might look at 5 charts, but I might leave those charts to tomorrow because I want to limit this video to about 30 minutes. That is my plan. And whenever I plan that, I typically go a little bit over. So let's get stuck into it. And let's have a look at a few trades. The first interesting one was this one. In regards to RoaringKitty, the GameStop meme person, you might have watched that movie. What was it called? Dumb Money. What was his name? Who played the actor's name? Paul Dano played RoaringKitty. RoaringKitty is really rich, and he just on Reddit or whatever he put in his latest trades and up $85 million just today, and overall his holding is something like $175 million in GameStop. So he is not of the people anymore. You can't be of the people if your holding in this one company is $175 million. Yes, so he has made a lot of money from what he did a few years ago with GameStop. I won't say what his AKA name is because swearing is not allowed on this particular website, platform, whatever you want to call it. The other really interesting thing was apparently at one point today, Berkshire Hathaway, the Class A shares were down 99.97%, fell $627,000 to $185. Apparently it was a glitch. According to Unusual Whales, it was a glitch. Now, that's not according to Unusual Whales. They said it is unclear if it is a glitch, and I'm pretty sure it was a glitch. Let me just confirm that. Someone on Wall Street's tried to buy Berkshire Hathaway for $168 and got filled at $648,000. There you go. Yeah, I did see a few tweets. People tried to buy Berkshire Hathaway Class A shares for $186, and I just don't think that's going to work. I don't think anyone was willing to sell their shares at $186. And yeah, this is a silly tweet from why aren't people more people doing that? You can just see it was definitely a glitch, a small glitch. Anyhow, that's all I got in regards to some tweets, some interesting tweets, some glitches, and RoaringKitty is really rich. That's what we have found out. Sheffield Resources is a nice little bounce today, but I am not going to discuss Sheffield Resources at all in today's video. So let's have a look at the ASX today. And first we'll start with the sectors, indices, and energy down 1.5% today. So hopefully you're not owning any Santos, Woodside, maybe Karoon, or maybe uranium companies that might be down. I did see uranium was down a little bit. Let me just confirm that. Let me confirm markets. Uranium, where's uranium here? There it is. Oh no, it's not. It's down a little bit, but not all too much. What if it's oil? Oil's down a little bit. That's down 3 days in a row. Anyway, Otherwise, materials, utilities, so some defensive in there. So mining and defensive had a bad day. Good day, really just stable. So maybe Woolworths, uh, Woolworths. What else is in staples? Is Wesfarmers in staples? Metcash. Let me have a look. What's in staples? Woolworths, Coles. Treasury Wine. Oh, I don't know about that. Endeavour. Really is alcohol staples? A2 milk. Yeah. Metcash. Okay. Yeah. So a lot of food in here. Yeah. Okay. I'll say food. Yes, food. But alcohol. I'm not sure that's really a staple. I could be completely mistaken. Anyway, so Staple has had a good day. That's about it. Financials up a little bit, healthcare up a little bit, and gold's had a good day as well. So even though mining is down, gold's had a good day, and ASX 200 banks has had a good day as well. Not even know what is in the ASX 200 banks because there's not 200 banks. So let's have a look at the ASX 20, and it's flat today. So banks probably are up. Santos and Woodside are down, I'm assuming. So I'm going to have a guess here. 10 No, I'm going to say 10 companies up, 9 down, 1 flat. Let's have a look. 10 up, 10 down. Oh, it's just trying to be a little bit too cute. So let's have a look at the worst performing companies in the ASX 20. Santos, QBE Insurance, Woodside, Fortescue, REA Group, BHP, Rio Tinto. So a few mining companies in there alongside Woodside and Santos. And then let's have a look at the best performing. CBA, Goodman Group, WiseTech, CSL, Wesfarmers, National Australia Bank. So nice little group of companies there, and people are still buying Commonwealth Bank, even though it has a P ratio of like 23. Ridiculous in my mind. It's ridiculous. Silly. You buy Commonwealth Bank when it looks cheap, not when it looks heaps expensive. It's not going to grow all that much over the next decade. I could be mistaken, but I don't know where that growth is going to come from. And even the CEO said there's not much growth, but there's less risk in the business, but there's much less growth as well. Okay, so let's have a look at top gainers today on the ASX. And hopefully, at least one of my top 5 announcements is on this list. And I'm seeing one company is there. And that company is Condor Energy, up 21.6% on an announcement. Andromeda Metals is not. I'm just going to have a quick look at this company just to see if they did release an announcement. And Clear Diagnostics, I'm pretty sure I looked at that company recently, and Andromeda Metals, or whatever this company is called, has not released an announcement since May. So no. And Clio, I'm pretty sure I looked at this company not that long ago. And it would have been on this ovarian cancer blood test outperforms clinical benchmark. They've had another good day. Just going to have a quick look at this company's chart. Is this confirmation of a breakout? Let's have a look. Oh, yeah, look at that. Beautiful. So it did pull back a little bit the day after I released that announcement, and it's just taken off again today for some reason. We haven't had a look at the volume, so let's have a look at the volume. Good volume coming in. This looks pretty good. This chart looks actually really good. I like this chart. I did put onto my watch list, buy Australia watch list. So I just wanted to see how it performed. And the very fact the share price went sideways, really not much selling after that announcement, was actually a good sign. And now the share price is up 29% according to TradingView, and current share price is up 29.2%. There you go. So someone loves Clio Diagnostics. But they did not release an announcement today, so it does not belong in the top 5. Condor Energy does, and I'll talk about that company when we get to it. In fact, Condor Energy came in number 1. I put Condor Energy at number 1, even though I've never heard of this company before. But the reason I put it number 1, the announcement looks okay, and the share price movement was up a fair bit, and the chart also looks pretty good. So few things going right for Condor Energy. Now let's have a look at the by market cap. Clarity Pharmaceuticals, another good day. Drone Shield, another good day. So these are companies at all-time highs whose share price keeps on increasing. And I did hear something really interesting today in one of the podcasts I did listen to, in regards to a lot of retail investors are very hesitant about buying companies that are at 52-week highs. And this person did some research, and you do significantly better by buying in companies who are at 52-week highs compared to 52-week lows. Yet a lot of retail investors go the other way because they think if a company is at a 52-week low, there must be better value. But what they don't realize is if a company is in an uptrend and getting to a 52-week high, more than likely they're getting to 52-week highs on a consistent basis. So there's a lot of momentum behind that company. So Clarity Pharmaceuticals, DroneShield, neither company released announcements today. Nice turnover and share price keeps on going up. I am trading DroneShield, do have a position in DroneShield, but not Clarity Pharmaceuticals. Anyway, that's okay. And what else is here? And that's it. None of the other companies that are in my list I did see here. Top 5 announcements. Bisalloy Steel, I did have that on my chart. I want to have a look at the Bisalloy Steel chart, and you'll see another company up nicely today. Another company that is in a beautiful uptrend, Bisalloy Steel. Now let's have a look at the worst performing companies today. By percentage change, I don't think there's going to be much here. DY6 Metals has been a company I've discussed in the past. So I'd say this company's share price is highly volatile. And in fact, this is a very negative day because the share price hadn't been doing much up until today. Now it's down a lot on fairly low volume, however, but that's not the thing you want to see. You want to see what happened with Clio Diagnostics. So completely different signals here. And I think the whole reason this company is struggling now is because the share price was significantly higher not that long ago. But the other company, Clio Diagnostics, share price is at an all-time high. There's no resistance. It's all about resistance. This chart looks really good. As I keep looking at it, it looks pretty good. All right. What else is here? Can Group did, I think they went back to, they were in suspension and they're now back to trading. Trading gold and copper being very, very volatile. Black Cat Syndicate did a capital raising, so their share price is down. Nanoview is another company that did capital raising. I featured this company not long ago. And then the next day, after they released a really good announcement, they announced a capital raising, share price down 13%, and the share price around the capital raising price. So let's have a look at by market cap. So Neuron Pharmaceuticals down again. Lots of volatility in that company. Polynovo and Zip. Credit Corp. In fact, I put Credit Corp onto my chart portion of this video as well. So maybe I will have a look at some of these charts because Credit Corp share price is down a fair bit. And again, on no news flow. So some really interesting companies here. Veeb, Cogstate, Integrated Research, MLG. I've been following MLG because the share price has been looking interesting. Another company who look like they share price wants to go into or remain in an uptrend. And this is a nice possible buy the dip situation with MLG Oz. Possibly. Very low volume. That's the other good thing. Really low volume today. So this is on very low volume. So there's not a lot of conviction behind the selling today. You want to see a little bit of volume coming in, and that volume might come in the next few days as people see this dip and they think now's the opportunity to buy some shares of this company, and hopefully the share price can get above about 90 cents, which would be a long-term high for this company. So possible interesting trade with MLG just because of a little bit of dip today. But the main thing is low volume, very important. And that's probably it. Okay, so let's go to the top announcements of the day. I did come up with a list of about 9 companies, and I am excluding 4 of these, and I won't even discuss those 4. I won't discuss them. There was one company that I won't mention that did have a chance, a fighting chance. That company is called Visionflex, another company I don't know much about. But the main reason I've excluded this company, even though the share price is up 20%, is because the share price is below 1 cent. It's at 0.6 cents. And then I had a look at the chart, and I went, chart looks pretty blur. Chart looks pretty blur. But the company did release a trading update, and I love trading updates. And this seemingly was a pretty positive trading update. And they are talking about cash flow positiveness, I think next year. EBITDA positive next year with growing enterprise sales and increasing ARR. I did have to have, follows a strategic exit of Pet Yeti and Go Booksings. I did have to have a look at this company's about section to know what they do. Global virtual healthcare platform that enables medical professionals to diagnose, monitor, and treat patients over a secure private network. Don't know about that business model. But anyway, Visionflex did not make it to my list for a few reasons, even though they did release my favorite type of announcement, a trading update. So let's start off with company number 5, and that is Paragon Care. Not an exciting announcement. The share price hasn't really pushed higher. The main reason I wanted to focus on Paragon Care is because the nature of this announcement, sort of a verification of what we thought was going to happen, and just the chart. So, a lot of announcements today, but the main one was at 9:30 a.m. completion of merger with CH2 Holdings. Now, when they did announce this merger, and to be honest with you, it's more of a reverse takeover than a merger. I did have a look at CH2 Holdings, and this company did intrigue me a little bit. And I thought maybe there is some value with Paragon Care at about 25 cents. And let's have a look at the chart. And this is the whole reason I wanted to include Paragon Care, a company that, to be honest with you, has disappointed over the last many, many years. Yeah, has been as high as 96 cents. But it's not the weekly chart, and that's almost irrelevant now because this is a completely different company. It's just a daily chart, a beautiful breakout. And then we had the little bit of a pullback to the low, share price low on the day of the breakout, a nice little sign, really good volume coming in. And the share price has just kept on increasing. And yeah, I was going to buy some shares in this company at 25 cents and I didn't get it. Didn't get it. That's okay. That's okay. But the chart looks beautiful. And I shouldn't have hesitated buying shares when it didn't hit my buy price. I should have just bought some shares at 26 cents or even 27 cents when it did look like, yeah, the share price was going to start going higher. And just beautiful shift in sentiment, beautiful shift in the trend in the share price. So this is Paragon Care. And this is just an example of a beautiful chart and a beautiful example of a shift in sentiment and a shift in trend. We can see this in just the last year. Share price, definitely in a downtrend. We saw a little period of time when it did look like the sentiment and the trend was becoming neutral between December and just before they released this announcement in March. So only about a 2-month period. And then the breakout on the release of this merger, and that was the time to get interested in this company. So a lot of times I miss opportunities like this, but it's okay because many opportunities do present themselves almost, I wouldn't say every day, but definitely a few times a week. You do get opportunities, maybe not exactly like this, but definitely opportunities. So that's Paragon Care. Coming in number 5. Coming in number 4 is another company that didn't release an absolutely amazing announcement, but I am trading Life360 right now, and the share price is up again. But they did announce the launch of a US initial public offering along with a prospectus for that offering. So have a look at this particular prospectus because I should probably say, in fact, I'm going to open it up. I do like reading prospectuses, not the whole thing. And this is definitely true for a company I don't know much about. And the reason I like to read prospectuses is because not only do they give information about the company, they give information about the sector, information about risks and that sort of thing, a lot of information about companies, the company that is IPOing. So a lot of times you will see a prospectus for a company that is IPOing. So if a company IPOs or has IPO'd within the last, say, even like 3 years, 4 years, I will go back and have a look at their prospectus. Now, this is for the American market, I'm assuming. And it's probably not as pretty as an Australian prospectus, but you do get a lot of information in these. So, for instance, right here is risk factors, market, industry, and other data. Now, one of the things about Life360 is name recognition. And just the other day, was the first time I heard this company mentioned outside the investing circles. So I'm pretty sure it was a podcast, a crime podcast. And this family were all connected through Life360. And then I believe one of the members, I think there was a daughter, she just disappeared. And I actually did mention Life360. We usually communicate through this. We all know where each other is through Life360. And she just disappeared. And I'm pretty sure, if I remember correctly, she was murdered. So that's the first time I heard Life360 mentioned. Not sure what they called it. It was definitely Life360. And it was definitely what they do. Anyway, so that's Life360. Now, the reason this company came in top 5 announcements of the day is not because of this announcement, it's the chart. And I am trading this, by the way, so for full disclosure purposes, Live 360, I am trading a company I more than likely would have never held in the past, but I decided to buy this company $11.39 on the day they rose 38%. On the 1st of March 2024, I just saw the announcement and went, oh, it's a pretty good announcement. This could be a breakout. It definitely is a breakout. And the share price keeps on rising. You see little dips in there, and these little dips, when the share price hits this short-term moving average channel, we see a buying opportunity. The last buying opportunity was on the 30th of May. Okay. So that's Life 360, a beautiful looking chart for the company. Pretty sure the company now has a market cap of $3 billion. So I am up probably 30%, 33% on this particular trade over a 2-month period. I'm very happy with that. No, that's a 3-month period, sorry. Very happy with that sort of trade. Anyway, so that's Life 360. Coming in at number 4. Again, not an exciting announcement. Some people might find it exciting, but yeah, it's just the chart. Coming in at number 3 is a company I don't know much about, Spartan Resources, up 3.4% today on an announcement. Pepper grows or continues to grow 25.24 meters at 16.66 grams per ton. Another announcement I did not open up. I don't know anything about this company, but this seems like a positive announcement. Sure, the market has reacted positively to it. And just like the other 2 companies, it's all about the chart. So let's have a look at Spartan Resources, another company with a nice, beautiful looking chart. This is a beautiful looking chart. In fact, it started to look beautiful back in July of last year. You could have bought shares in this company if I knew this company existed, about 22 cents, and almost quadrupled your money. Yeah, you cannot complain about this company's chart at all. And yet, I don't know anything about this company. And that's one thing I want to learn, is to have more faith in reading charts and taking a position in companies that I know nothing about just based off their chart. And this would be one of those companies. You don't have to know what a company does to trade the chart. Just trade the chart is one thing I need to learn a little bit more about, because I do have biases. We all have biases, and maybe this is an exploring company, and maybe that's my bias, and that could be a negative bias. Now, another argument could be I would have more conviction trading companies I know more about, and maybe that is beneficial when it comes to me maybe prematurely selling out of my trading positions, which I have done in the past. Maybe. So that's Spartan Resources, and again, just the chart. I'm assuming this company is an exploring company. Nothing in. Well, they just did a massive capital raising in April, $80 million capital raising. And the way you can just determine whether a company is operational, in production, or just an explorer is just have to open up the quarterly activity report. And usually you can see straight away. If they mention how much they produce, blah, 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 all-in sustaining costs, it's a producing company. And this one goes straight into exploration and growth. That's it. It's pretty deep, these drill hole thingies. But nice hits. Where is let's have a look to see if they've got any location of the mines. No, it's in West Australia. Can't go wrong with West Australia, I suppose. Anyway, and how much cash? Yeah, the other thing I'd probably look at is how much cash do they have. So it's easily found. Now, $29.8 million at the end of this quarter, but they did do that capital raising, so they would have over $100 million of cash. No worries at all. So that's Spartan Resources, coming in at number 3. Coming in at number 2, you'll notice the share price of this company has not moved. But the indicated price is up almost 10%, 79.5. This is the interesting one. So this company, I think, did the right thing. They announced FDA clearance, or they received FDA clearance for their gastrointestinal parasite detection kit. So it does sound like it's a really Could be a really monetarily significant announcement or clearance for this company. And they also, at the same time, announced a $30 million capital raising. Now, look where the share price is, 73 cents. So let's open up the presentation. I did have a look at this company, or I have had a look at this company in the past. We'll have a look at the chart in a second. Now, this company did have it, because this is a testing company, they do tests. And so a few years ago, this company really benefited from COVID-19. You can see that in the chart. This company was operating cash flow, free cash flow positive by a significant amount. But those tailwinds from COVID-19 turned to headwinds, and they were doing much less testing. Now, a few interesting things about this FDA clearance and capital raising. Okay, first thing is, remember, the share price was 73 cents. They're doing this capital raising, I should mention this first, at 75 cents. So it's actually a premium to the previous day's closing share price. Very rarely do you see a premium to the previous day's of last day's share price. So a $30 million capital raising, $6 million placement, and what's the rest of it? Yeah, so $6 million placement, which means $24 million capital raising with retail investors. Now, here's what I found more interesting about this particular FDA approval. So they do have a total addressable market of $500 million per annum, and their target is to achieve 40% of market share in the US within 5 years. Now, there are assumptions behind that total addressable market. That assumes an indicated selling price of $60 per test, displacing existing testing, which apparently is significantly worse than this detection kit. So this detection kit should be significantly better than the existing technology. But the question is, health carers are notoriously slow to adopt new technology. So they might have these targets, but there is a question of whether they can achieve these targets. But if they can achieve 40% market share with a total addressable market of 500 million or greater than 500 million, that equates to $200 million per annum. That's within 5 years. That alone gets me interested in this company. The first thing that gets me interested is just the FDA clearance. I love FDA clearances. That can open up lots of doors for a company. So I'm going to go through this presentation a little bit more in a finer tooth comb, whatever, because this is definitely an announcement that interests me. And that's why the indicator price is now 79.5 cents. So once they announce the placement was successful, that's when they'll start trading again. Just going to open up this other announcement just to verify. Yeah, there's a placement and then an entitlement offer. And what is it? A fully underwritten, accelerated, non-renounceable pro rata entitlement offer, 24 million. I have no idea what all these words mean. I should learn what accelerated, underwritten. I think underwritten means if they're not fully taken up, there is some sort of fund manager who will take up what's ever not taken up. Accelerated, non-renounceable pro rata. That's what I got to learn. Now, that's coming in number 2 is, before I move on to number 1, let's have a look at the chart. And this is another reason why I included genetic signatures in this video. Now, let's have a look at the weekly chart first for this company. In fact, I don't even remember doing this. So we've got a pre-COVID and a post-COVID. So the share price of this company was actually in a nice little uptrend just pre-COVID. Share price got to above $1, going sideways for a period. And then COVID came along. Share price went from about $1 all the way to a high of almost $3. And then those tailwinds came to an end fairly quickly. And the share price has been in a nosedive ever since until now. And finally, we have seen a shift in sentiment. So let's have a look at the daily chart. And this shift in sentiment is fairly similar to Paragon Care. So you can see negative sentiment, downtrend. We saw a little bit of a shift in the share price, but I wouldn't say this little period here from December last year through to February wasn't a shift in sentiment or wasn't a shift in the trend, but it was starting to look promising. And then we saw a breakout or a potential breakout on the 1st of March, and the share price ripped higher over about a 3 or 4 day trading period, and the share price has gone sideways since then. But at least the share price looks like it will be breaking out on the back of this particular announcement, because the indicated price 79.5 cents. If it gets to 80 cents, that would be a multi-year high. Yeah, last time share price was as high was back in April last year. So, and I would expect some really good volume coming in as well. So this could be a breakout when it comes to genetic signatures. So definitely put this company onto your watch list. If you're much less risk averse, this could be on your watch list for maybe the next 5 years. But if they do achieve their goals, wow, this company will be bringing in the cash on a yearly basis. Coming in at number 1, we have a company I've never heard of before. CND, Condor Energy, up 21.6%. Has been up a little bit more than that. So the high of the day was 5.1 cents, but at least the share price has been, not in a free fall since that high. Multiple petroleum systems confirm oil and gas plays. I did not even open up this announcement. Okay, so it's just a reaction from the market on this announcement. I probably, even if I open up the announcement, I probably wouldn't be able to understand it. They probably have all these numbers. So I am opening up for the first time here. Maturation mapping shows that at least 2 source rock intervals are present within the TEA. Heath formation, blah, blah, blah. This is definitely the sort of announcement that I think you need a little bit of knowledge on. In fact, they've got no numbers at all here. And this is definitely more of a technical, in my opinion, this is more of a technical announcement. And I won't read these type of announcements because it's too technical for me. I'm not smart enough. But the one I am smart enough is to look at the chart and look at how the market has reacted. And the market has reacted quite well. So let's have a look at the chart. So the main reason this company came in number 1 is just the market reaction, up 21%. And then I had a look at the chart. I went, oh, the chart doesn't look all that bad, particularly if it can go higher from here. So this is, again, fairly similar to genetic signatures. And what was the other one? Paragon Care. Share price was in a downtrend. Share price consolidating for a long period of time. Talking about years here. Going sideways at about 1.5 cents to 2 cents. And then all of a sudden, a little bit of interest from the 28th of February. Share price starting to go up. The market started to like this company. A little bit of a pullback. And now we get this announcement. Some good volume coming in today, but probably not the strongest one-day candlestick. And the whole reason why it's not the strongest is because we do have a little bit of resistance of all these shareholders who bought in at slightly higher prices. If the share price went along the moving average channel here, and we had this day today, this could have been a better day. So the question is, does this company belong at number 1? In fact, I'd probably put genetic signatures at number 1 now if I had to rethink my order. Now, I did this ordering at about 12 o'clock, so almost 4 hours ago. Anyway, so a company I've never heard of before, Condor Energy, don't even know the market. What is the market of this company? I'm thinking 20 to 40 million. I could be completely wrong. 26 million. There you go, 26 million. By the way, genetic signatures has been well over 100 million. Now it's 136 million. So it's still above 100 million. And that's probably it for the announcements of the day. I will go through a few charts very quickly because 35 minutes. When did I start this? Yeah. C79. The first 2 charts I'm going to show you are companies who have seen their sentiment and the trend in share price shift from positive to negative, unlike genetic signatures, Condor Energy, and Paragon Care. So the first one is Chrysos, and I did trade this before. So I bought in way down here, and then I sold out. And I still remember selling out and going, oh, is this a mistake? So beautiful uptrend, beautiful sentiment behind this company. And then we saw a period where the share price just collapsed over about a month period from the 10th of January through to the 31st of January. So most of January, share price dropped from $8.60 to $6.20. Then the share price bounced, but it didn't do anything. It just went sideways. So I think this sort of selling in here in January was the end of the uptrend. And because the share price didn't really rebound to get even close to those highs we saw at the start of January, that was the end to the uptrend. So it is tricky to know exactly when the uptrend or downtrend comes to an end. I would say confirmation would have been on the 24th of April when the share price fell 12.4%. That is definite confirmation the uptrend has come to an end. But I think it happened before that. And I think it's just this period the share price fell. And I'm pretty sure the share price fell a lot on the 24th of April. That would have been the Appendix 4C. And the share price is lower since then. This looks like now a downtrend, definite downtrend for crisis. Same thing happened with Duratec. So this was another company I traded. And so there is me buying at 55.5 cents. I did sell out, I forget where. I should put where I sold. But the share price was in a beautiful uptrend. There's no argument from when I bought on 21st of November 2022 through to somewhere in here. There's no doubt the uptrend is at play. But when does the uptrend actually come to an end? Now, you could say this is a bit of a dip back in October last year, a bit of a dip, and then it took off again. But this was the first sign of a weakness. I don't think this was the end of the uptrend, but definitely it did put in place a really good support level at about $1.08. Share price took off, and then the share price really struggled to get higher from there, from the highs we saw back in January. And definitely this announcement here, the 23rd of February 2024, was the sell signal for me. So not sure. I can't remember exactly when. I think it was that day. It was either that day or a few days after. That was a sell signal for me without doubt. And I even remember someone saying something about the margins. And I did sell, I think it wasn't that day. It was a few days later because we had a really good bounce. But that bounce wasn't strong enough for the share price to keep on going. You need to see a really good bounce on a really good volume. So this was sort of the uptrend killing event, the 23rd of February, when they did release their results. Share price down 16% on that day, and the share price has struggled since then. So I would say that was a confirmation of the end of the uptrend. But we did see a bit of weakness a few months before that. Even though share price went higher, that was a bit of weakness. And I will show you Bisalloy. This is the definition of a beautiful uptrend, even though I am not trading it. Beautiful uptrend for Bisalloy still. You can't complain about that. Even if you look at the weekly chart over a week, over a long term, what a chart. From 2017, the share price broke out in July 2017 at about 60 cents. And a beautiful weekly chart. Probably, if I do look at this weekly chart, it's just acceleration of the share price recently that would have me nervous. But even if you look at the valuation of this company, markup 174 million, a dividend yield of 4.8%, P ratio of 13.2. So maybe it's not that expensive. And maybe it's, I don't know. But a beautiful chart, Bisalloy still. Onto maybe not a brilliant chart, and that's Credit Corp. I do know a lot of people do like this company, and I don't know why. I don't understand this sector. And the share price was down 7% today, wasn't it? And it's really interesting because the share price went on a little bit of a rally over a 5-6 day period, and the share price today blew all that rally in one day. Just shows you fear is much more powerful than greed. And if I do have a look at this chart, there's nothing at all exciting about this chart whatsoever. I wouldn't be in, even if I was a shorter, and I have never shorted in my life, more than likely will never short in my life. Even if I was a shorter, I wouldn't be shorting this at this point in time. That's Credit Corp. And finally, Avita Medical. Why am I showing you this? Because this company received FDA clearance recently, and this company was on my watch list because I just wanted to see how the market performed after that FDA clearance. And the reason I wanted to see how the market performed was because even though the share price did rally on that day by 12.4%, you can see how much the share price had dropped in the past few months. It has dropped a lot. So straight away, I thought there's just going to be too much resistance. There's just going to be too many people wanting to sell their shares in this company, and more than likely, we will see the share price drop. But I needed confirmation on that. And yes, the share price has dropped. So I was looking at the company's share price about $3 2 days ago. Now it's down to $2.70. So the share price has actually dropped about 10% since our announcement. And the share price is getting to the level it was before that FDA clearance announcement. This just shows you the impact of resistance and the impact of a significant drop in the share price over a short period of time. Increased resistance, and less likely the share price will move into an uptrend after this. Now, if the share price was at least, say, a 3-month, 6-month, or a year high, I reckon the share price of Vita Medical would be higher now than the day they released that announcement. So, and the main reason behind that is because there's no one wanting to sell shares. The announcement, FDA clearance, has been treated positively by the shareholders. And a lot of people, a lot of shareholders now are thinking share price has rallied 14%. Now is time for me to sell my shares in Vita Medical for a smaller loss, that sort of thing. That's the definition of resistance. That's why psychology, or understanding psychology of investors, is important. And I think I've told this a few times before. I don't know many people who I work with who do invest in the share market. There are a few, but 2 different people told me this. Separate people, a few months apart, said this to me. Oh, I bought this share, the share price fell, and as soon as the share price goes up, back up to where I bought, I am going to sell. That's the psychology of most shareholders. If the share price doesn't rise straight away after they bought, the company is automatic at dog stock and they just have to sell. That's what you're competing with. And if you understand that, and if you can control your emotions, you are going to do significantly better than the market. And that's absolutely true. And all you have to do is put a little bit of time and you can double market returns with that little bit of effort and that little bit of time. Anyway, so that's all I got for today's video. Yeah, again, went a little bit longer than I expected, about 40 minutes, but it's okay. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.